Hello, good morning in Europe, good evening in the United States. This is Ahura with another daily outlook video. We are going to have NFP data today while the mixed numbers and data and economic data is increasing a little bit more concerns in the market. uh, in this video, we are going to see what happened yesterday, what is going on right now, what we have to expect from today's data and how to trade and how to use them in our day trades. As you know, the major central banks already they had their meetings in the past 2 weeks. The last shock was yesterday's BOE meeting. With the current decisions of the central banks with holding the rates and decreasing the asset purchases less than what market was expected to see, uh, telling us giving some signals. So let's put first tell the what happens and let's get the common signals from them. Central banks, all of them they increased their expectations for inflation in 2022 and 2023. All of them they decreased their GDP growth for 2021 to and 2023. All of them they have a concerns about the employment, especially in the US. Yesterday, while we had a layoff with more than 22,000 layoff in the last week, at the same time, initial jobs claim decreased to 269,000 for the week ended October 29, which is the lowest level since pandemic started. At the same time, we can see that GLT jobs is increasing more than 10 millions for the several months, while still we have more than 5 millions unemployed people comparing with the same level of with the employment level of pre-pandemic. Many employees, they decided to don't go to the job to their previous jobs for different reasons. They say that probably there are different reasons. Some of them they have already the new job, which is online marketing, online trade, online whatever. They have their own job, even if it has less income than their previous job, regular job, they prefer to stay home and work online. The second part is the people that they want higher salaries because the higher cost and the higher inflation cause them to request for the higher salaries. The third people early retire. Some of people they already retired themselves. Another part they are the people that they would like to go to the job but not now. While the totally the societies still have different societies all around the world, still they do have the concerns about the growing numbers of COVID-19 infections. All this together telling us that the labor market still should be, and it is, the main concerns for central banks. Today we will have non-farm payroll numbers. Wednesday we had ADP numbers. ADP shows us that the jobs increased more than 500,000 comparing with the 400,000 that market was expecting. Today for NFP, it can be, while always the NFP numbers are important, but today's NFP number cannot be that much important because while the market is expecting for 450k jobs, and even if the ADP number is confirmed that more than 500 jobs in the last Wednesday, actually in Wednesday, not the last Wednesday, this Wednesday. Let me tell you the exact number. ADP, I can for yeah, 571k, comparing with 400k expectations. Still, even if the data same as the NFP data, same as ADP data shows that the labor market is increasing, still Market cannot confirm market. It will not affect the market too much because today we already have the central bank's decision, and it's not going to make any changes in the central bank's decision. So it can be if the next month will be important, but not this month. The next NFP will be important for the markets, but this NFP will not be that much important. It's not going to change too much in the market. However, this is the current situation about the labor market, about the inflation also is increasing. That's the reason, putting all of them together, it's the reason why we can understand why the central banks they enter to the new round of the policies. When you see that the central bank of the Europe also repeatedly emphasizing that we are not going to raise to hike the rates, at least for 2000 for now and for the first half of 2022. Same thing we saw yesterday in the Bank of England and Bank of Japan. Same thing happened with Bank of Australia. Just the Bank of New Zealand, Central Bank of the Reserve Bank of New Zealand, Central Bank in Norway, and Polish central bank. They just increased the inflation. They just increased the rates. Other banks they did nothing. They didn't change it. So the reason is that this is that was the concerns and that was the concern and issues at the moment in the markets. At the same time, yesterday we had another economic data for the first time since pandemic, because of 0.6% increasing of imports in the United States. We saw the U.S. Balance, just like trade balance, fell to, I don't know, so like let me tell you that fell to what? Yeah, $80.9 billion. $80.9 billion. Last month it was 72.8. It's like $8 billion more. This is one of the worst numbers that we had since pandemic started. As you know, since pandemic started, because of the lower imports, we already had a better trade balance. But at the moment, with the reopenings and with the increasing of the imports, we can see it again that the trade balance is in more negative areas. This is about the trade balance, and this is about the concerns that the central bank, FOMC, and the Fed should think about that, and that was probably the reason that they hold their support for the financial markets, for the stock markets. That was the reason that we can see the US dollar increased. Let's go to the US dollar chart. You can see that the US dollar increased to the new levels. This is US dollar chart, not the new levels. I mean the new levels in the last day after the falling sharply on Wednesday. Thursday, it touched the 94.46. Why? Because of these concerns that I told first. And second, as you know, currently 0 to 0.25% of the rates in the United States is much higher than the Europe, is much higher than the Japan. So the carry trade is the reason. The people they sell their yen. Sorry. People they sell the yen. People they sell the US euro to buy US dollar, to buy US bonds, US Treasury bonds. Why? Because of carry trade, because they know that they can get more higher interest rates in the United States than Europe, higher interest than in the United States than Japan. And already the central banks they told that they will hike rates at least in the second half, not before the second half of the 2022. So they have still 1 year to use this opportunity. That was the key data that I have to watch about. So the US dollar increased, but as I told, because of the current still the dovish policies that we had, it cannot increase that much. But still, as I yesterday confirmed, yesterday talked about that, it will be stay above 93 for time bound to see that the next NFPs, not this NFP, to see the next months and next NFPs, next data, economic data, and labor markets data, what will happen in December and January. But for now, it will be above 93. But then same around the same levels around this. For today, If we say that the day trades for today, US dollar will be around the 94, 94.40, 30 in the same area. It will not change that much before NFP. And NFP, as I told, NFP can move the markets for a few hours this time. It's not going to change anything in the market for next Monday. So whatever we will have after NFP, we will have after NFP today before market close. After market close on a Monday, no one cares about the NFP data because it's not going to change anything in the market as already policies already decided. For gold for the same concern that I mentioned yesterday increased, but the financial this is what yesterday I repeated several times that currently still we do not have enough encouragement for gold to increase more or fall more. For now, actually, we have more data, more evidence to say that the gold can fall than the evidence to say that the gold can increase because economy is increasing. Economy is fine, and central bank is supporting the economy. So we don't need that much to the safe havens. Even if we have some concerns here, still the earnings, I mean, the concerns are about the labor markets. The concerns are not about the, even if the concerns are about the economic growth, it's about the lower speed of economic growth. It's not about that economy is not improving. That's the difference. So the gold still doesn't have enough request, enough demand to go higher level. So this level can be same thing and a little bit lower. If you go to the 4 hours chart, you can see that. This is about the gold market, about the oil. Yesterday we had a data. What happened yesterday in days? You see that yesterday after that gold oil was increasing in a normal with a good price actually. The price was very good and increasing fine. We had a news from Saudi Arabia that their output for the first time after pandemic is more increased above 10 million barrels a day, and this increase in output, it's not about increasing in it's just in output, it's not about the export. However, the output increased more than $10 million for the first time since pandemic. It means that there is a demand and there is a request, and today ahead of OPEC plus meeting, oil fell after this news. So this input, this increasing input, will that means increasing export as well or not? Today we will understand in OPEC plus meeting what they are going to decide. It's about the oil and about the stock markets. For the sixth day in a row, S&P 500, 1, 2, 3, 4, 5, and 6. Let's make it slow, just zoom out. 1, 2, 3, 4, 5, and 6. 1, 2, 3, 4, 5, yes, 6. For the 6 days since October 28. 6 days in a row, we had higher high. We already in S&P 500 in the last 6 days. Every day we are testing, we are experiencing, this S&P 500 is printing new higher high, and it's increasing as central banks confirm their support, as the market still positive about the earning reports. Let's say that these data all together help us to be positive about the earning reports, to be positive about the economic data, and to be positive about this earning calendar. Yeah, to be positive about the future of the stock markets. However, to this concern, a little bit changed the market. As we know in Asian market, we had a little bit again. Yeah, let me say something about the Asian markets. Developers again, they made the problem in Asian markets. I mean the construction developers, not the computer science developers. Some developers again in Hong Kong, their stock is banned, and this concerns about the developers concerns in the Chinese market and Hong Kong market still is going on. Some of these companies, they are not able to pay back their debts or their bonds yields. So this is a little bit the concerns there, and it's caused the negative impact in the Asian markets. As we know, so far for now, Nikkei even in Japan, Nikkei is losing 0.5 0.7%, Hang Seng and almost 1%, and Shanghai is almost 0.24%. They're losing. The futures, U.S. futures market, but still fine. SP 500, as you saw, is a flat. As you see, it's a flat. Nasdaq and Dow Jones also almost the same. Just like the Dow Jones and Nasdaq also since opening of this futures market, since opening, they're almost the same. It's a flat and waiting for a reason to start falling or increasing more. So this is the signs of probably we'll have so for example, this is the Nasdaq. If we go to the latest, what the last days, what happened with the with with this rhythm, still we can see a little bit east to 60,000, almost 300 and 350, 300, and again increase more, or to fall for 16,200 and again increase from here. This is for the Nasdaq, but generally we are in an uptrend still, and it's confirmed. So in Asian markets, as I told, the developers, the construction developers are the main constants right now, and it will this is the, I'm just checking, I'm sorry, I'm just checking at the same time the news, that if I didn't forget anything to tell you. This is the main concerns at the moment in the market. This is the developers in China, and it's the Kaisa Group. This is the Kaisa Group in China. This Kaisa Group in China, the next, the latest developer that has a concern about the earning reports. Yesterday we had Toyota, amazing report from Toyota. We had Airbnb could beat the expectations as it was expected, and but the Uber lost. Uber still, this, let's say about the Uber lost so badly. The market was expecting between losing 22 cents till 38 cents, but the company lost $1.28. Even if the overall revenue was at 4.85 billion, more than 4.42 billion of expectations, but the EPS missed expectations. About the Uber, actually with the changes that they are making in the company, they told already before that the third quarter is not going to be the positive quarter for them, but it's going to be not bad to be prepared for the positive EPS in the fourth quarter. But still, the young company in the stock market, as you know, it went to the public in just 2.5 years ago. It's not so old company stock markets, but however, it's just missed the investors, and we will see that Mr. Dara what is going to think about the company's next plans to cover this loss. Generally, yesterday, just few companies they missed the expectation. All others they beat the expectations, and they were better. They had a better performance. And today we are waiting for Mr. Buffer's company, Berkshire, and other so many other. Just like I'm just watching if there is any important company during. No, not that much. Not that much. Just I like to watch. But still we have too many companies. For now, for this with this, we will have more than 350 companies. With today's report, we will have more than 350 companies of S&P 500 list. Thank you so much, guys. So for today, we have to watch. Sorry, let me just go to the economic calendar to see what we have to watch for today. Besides the NFP numbers from the United States, we had so far household spending in China and Japan better than expectations. It's increasing. It's a positive data for the Japanese yen and the Japanese economy. But today we'll have the employment data and PMI numbers, employment data from the United States, and the PMI numbers from Canada, the most important numbers that we have to watch. In overall, the stock market is still positive. Oil will be a little bit, just the OPEC Plus meeting will cause a little bit the oil market. We will see what they are going to decide and what it will affect the markets. US dollar, and just to mention, the US dollar is still increasing, but today we can see some ease around to 94 mark. This is generally what's happening in the market, what you have to take care. And if you are going to trade, these are the data and these are the news and the economic situation that you need to be aware about them. Okay, guys, thank you so much for watching. See you guys on Monday. Have a good weekend. Take care of your last trading day of the week. Bye.